or I mean, one's income and one's guideline, so just get one of each.
Yay, Chris.
One through each.
I need a highlighter. I thought that too. Will you grab me one?
What did he do?
Brenda, will you
Set it
grab
right
one
here.
for me? Yeah.
Thanks.
Yep.
That's just wrong.
Well, no,
What's
it
up
doesn't
with
have to be
that
that close,
stand?
does it?
Yes.
Yeah, what is up with that stand?
Okay, we'll back it up a
Tommy's got
little.
some.
Looks like,
Is it there?
looks like a sex toy.
Too
Yeah,
close?
His head's still out.
Alright, so one
I
of you.
found one of those in my.
It's recording, Andy.
Oh, sorry. Well, then you really got those.
It's on Facebook Live.
Oh, yeah, I better not be. You better be on investigators on Facebook Live. at.
So, there's two of these?
Yeah.
Wait, what's the big appointment?
I are cold.
Cause I heard you.
Yeah.
When do you all need?
You don't, she needs that one.
You need the back one. Does anybody else need the front one? Do you have that?
Alright guys, we're gonna go through this, hopefully 15 minutes, we're gonna be out of here.
Excellent.
I know it's Friday, everyone's ready to get out of here.
What if we have questions?
Well, if you have questions, then you can just hold them until Monday.
Just go knock on his door. He loves it.
Alright, so what I've done is I made VOEs, and made some documentation to kind of make the math easy, but you guys should all get the gist of what we're trying to get at here. So, a couple things we want to go through is bonus income, overtime, and commission. So let's start with the first VOE. Where it lists overtime income for 2015 is $2,500, 2016 is $3,500, and then $900 for year to date. So the way we calculate income for this guy is we have to take a 2-year average, the best we can. So we would use his probably 15 and 16 average and make sure it's supported by year to date. So let's make sure that's supported, 2,500 plus 3,500 divided by 24, so that's $250 per month. And these are all paid to 3/31. Okay, that didn't print out like it should have, but his year to date is 900, so divide that by 3 months, cause he's worked 3 months this year. Yeah, that's 300, so.
We're good.
Yeah, his year to date, it supports his overtime, so we would use $250. If we need to get aggressive with it, we may be able to roll in the year to date. But $250 is pretty close. If we roll in the year to date, then we're looking at dividing it by 27 months, which is not gonna help, which is not gonna give us much more income. All right, the same applies for bonus, so let's take a look at the bonus for him. $1,000 for 2015, 2,000 for 16, and year to date is 2,000. So what we would do is, whenever I see a bonus income like this, we know his year to date of 2,000, he probably hadn't received, it's probably a yearly bonus that he received. So we wouldn't use his year to date plus 2016 and divide it over 15 months. We would just say, hey, it's a yearly bonus, and we give him $2,000, right? 2,000 divided by 12 is not $16. $166, and that is supportive of what he earned in the past.
So if the customer receives it like in October or November every year, it would be acceptable just to get a pay stub for the prior years proving that, right?
Right,
You
if
wouldn't
we
have
get
to
a pay stub.
letter or anything.
Right, or if they want to write it on here, or just by looking at it, we can make the assumption that.
So if it's 3-6 months into the current year, that's always just to support the previous 2 years, or do you ever divide by those months of that year?
We can divide by those months, but it has to really support, so you can't have a huge number for
To
the first
increase
6
it,
months,
right.
yeah. You can use it, but you have to be careful, you have to make sure you just didn't have a bang up 6 months, and then it's really not gonna continue for the rest of the year.
Okay.
Like a tree salesman, or a Christmas tree salesman, December and November, they're gonna do great, right? But for the rest of the year, they're not gonna do it. So you have to make sure that you're seeing the whole picture of what they do. You have to take into account what they do also for a living, to make sure it makes sense.
Cook, you have one of your customers here.
Who is that? Should be familiar, isn't it? Yeah.
It's not Littleton, you idiot.
Oh my gosh.
Wow.
It's not, it's.
Brenda and I have that relationship. You really can't post it now.
Watch
Notice
it.
whenever we look at the VOE, it's, there's a box that says, is overtime bonus likely to continue, yes or no? So I tricked you guys and said bonus is not likely to continue, so if it lists that,
No.
we wouldn't be able to use bonus, so make sure.
At all, right?
At all. So that'd be like,
Kinda like you change positions and now it's included in his base
Yeah.
and he's not getting a bonus.
or let's say he's hiring people in and he's getting a bonus for, you know, for new employees that he brings on board. Of course, that's not gonna happen every year, so that would be another example when bonuses are, it's a one-time pop, probably not gonna continue.
So since it's not gonna continue, you can't use any of it.
Can't use any bonus, we can use overtime, because it looks
Cause
like
then you
it's gonna
can't expect it
continue.
into the future.
Right,
Just get a new VOE.
yep.
I'm sorry, that one didn't come out right. Can you restate that?
Just wide it out. Alright, let's go to the next VOE. This one, let's focus on the overtime.
Can I ask another question?
Yep.
What about the situations where they are changing their structure, or it has changed, the way that they've gotten
Yeah.
it? Letter from the
Letter from
HR?
the employer
Is that
explaining what's
good?
going on. Yeah, but it needs to make sense. Again, it all needs to be supportive of what they've earned in the past. So if they went from, you know, a commission borrower to a bonus borrower structure, but his job's exactly the same, they just changed the way they pay him, that's okay. We can either call it commission or bonus, we'll just have to explain what
But
we're
if it's a
doing.
different position, then
If
we're
it's
not happy.
a different position, then that's gonna be tough to say it's gonna continue, especially if it's declining, okay? All right, let's look at the next one. Let's look at the overtime. In 2015, he made $12,000. 2016, he only made 1,000 for overtime. And then, year to date, he made 3,000. So it looks like something happened in 2016 for his income. And also, if you look at the bonus, same thing happened. His bonus went from 12,000 to 1,000. So in this case, it looks like the overtime and bonus income is not stable. So we would either not use it or figure out why his overtime and bonus declined so much in 2016. Maybe he was sick, maybe who knows, right? It's hard to tell, but just by looking at this, we'd say it's not stable. And we'd need a document. If we used it, we'd have to explain why we're using it, where it's at. Hopefully, we'd have a little more history than what we have here, if he's back on track.
So what if he even had like, let's say 1,000 in year to date? That's still way off and unstable.
Right.
This is one year's
Yeah,
spike.
kind of rule of thumb is if your income's declining by 25%, we can't use it. That's a pretty good rule of thumb to use. I think that is FHA's rule.
Sorry.
We can hear you.
But see, notice on this VOE also says if paid hourly, the average hours worked per week is 50. So it looks like he's working 10 hours per week overtime. So looking at this, it leads me to think that something happened in 2016. Why didn't he earn the income? If he was sick or just something weird happened and he didn't earn it, but he's gonna start earning it again in 2017 year to date, we can even go back and look at 13 and 14 and kind of figure out, you know, exactly what happened, how are we gonna support the income that we're gonna use.
So what about the cases where we know for a fact that they've just been there for 18 months? So with extenuating circumstances?
Yeah, so we can use overtime if it's under 2 years, but we have to be careful the way we document it. We can get previous VOEs and see if they have a history of earning it.
What if they don't?
If they don't, then it's pretty tough to use it. 18 months, we could probably get away with it. 13 months, probably not, right? There's
Would
really
we
not a
average
history.
it over the 18 months, or would we do the 2-year average on it?
You would average it over I average it over the months they work,
Okay.
not over how long they should have received it. Unless there's spotty, you know, income with he earned a whole bunch one month and not the next month. I mean, we could look at different scenarios and see what works, but typically, I average it over the months that he's actually earned it. And the other packet is the guidelines, and it does give us a little guidance on what we can use for overtime.
So when it's
Bonus.
been just over 18 months, do you think that it's important to, when they're trying to pre-qual a customer, do they need to submit that into underwriting? Keep in mind, we're about to get really busy.
Yeah.
Or do you think it's a safe bet that if it's a strong file and it's over 18, then we're okay?
Yeah, I mean, but it's hard to tell without really seeing the VOE where they're at, because it's, unless they give you a year-to-date pay stub for last year, it's really hard to figure out how much is, because everyone's paid, you know, bonuses and overtimes, and so it's hard to tell exactly which bracket that income falls in, but absolutely, we can, you know, your question, if you guys can send it in and go, hey, here's kind of where we're at, we can make this deal work. So yeah, send it in, that's a pretty quick judgment on our side too. But typically, if we can run it at 18 months and make the deal work, guidelines say we can do it, so we should do it. And that's listed at the top of this page here. It says it looks for 24 months, but it can be considered as less than.
Is 18 months the minimum that you would consider?
Yeah, I mean, but again, you know, if they just graduate from college or something, then that kind of makes sense to use a lesser than 2 years. If he got a new job, then maybe, but if he's been on the same job and just now started working overtime, then that'd be pretty hard to justify.
Right.
And then FHA will make your, average over 24 months, pretty much.
No, FHA, they don't give guidance on it, they just say, I mean, they don't tell you how to calculate it, they just say what's acceptable, what you can use, history-wise. Mandy?
Next.
We're ready to get to her appointment.
I don't know, ask a lot of questions. All right, this borrower, we've got, I know. This borrower's 100% commission. It looks like his commission's on track. He made 45,000, 15, 49, and then 12,000 for year to date. There's also note says he has a $3,000 base income draw, so we know that's just commission. Don't get thrown off that we can use a base draw all the time, because he's basically borrowing from future earnings. So in this borrower, what I would probably use is a 15, 16 average again, about 24 months. So that's 3,967. And then we know he's worked 3 months for this month, times 3. So that looks like it's supportive of his year to date. His year to date's 12,000, and if we use his average, multiply it by 3, then that gives us 11,751. So his year to date is supportive of this commission income.
So he's stable.
He's stable. Yep.
So what happens if his year-to-date for each year is not quite the 3,000? Since he's got that guaranteed draw, would we use the 3,000, or would we still use the average?
We still have to use average. Yeah, you gotta use average. Now, whenever you have a 100% commission borrower or anything over 25% or greater, what do you guys have to look for? You remember? 21 of 6 expenses, right?
Mm.
All right, so I just happen to have some in the file.
So prepared.
All right, so if we look at Schedule A, it looks like he has $15,500 worth of 21 of 6 expenses. So we have to deduct that from his earnings. All right, what we can add back is mileage, which is on the second page back there. And we add it back at 23 cents a mile. So he told us he drove for business 5,400 miles. 5,400 times 23%, yep. 1242. So we can basically give him back 1242.
How much, 1242?
At the 23 cents a mile, at this number here.
So just take that off, reduce his unreimbursed essentially
Right.
by that same 12 or whatever.
But
Mm-hmm.
you said 5,400 miles?
Yep.
That one
But
just,
that's
that
the
one just says
vehicle
expense.
But the miles are on the next page, right?
Yeah.
Business miles, 1,000 miles,
Ours says 10,000.
that doesn't
Oh.
10,000 miles.
10,000,
Well, I'm not a CPA. You're right, so we would
So you
take,
can take
we
his
would take,
expenses.
So you can
Right.
take the unreimbursed,
We're gonna need to go back and review all those files.
down. So we would take the mileage,
the unreimbursed less
right,
the mileage.
right, the mileage is here, but it flows through on this page here.
Right.
So this is the actual mileage, so right, you're right, we would take 10,000.
The mileage times 23%.
Times 23%.
2,300 bucks.
Which adds back 2,300, right.
It's, I mean, but still, if you're reducing, you're taking out 15 grand and only adding, I mean, it's still not.
But, you know, that's,
That's
It
a
can
hell
make or
of- that's
break a
helpful.
deal.
right, sometimes it could help.
I mean, it's, so 13,000 divided by 12, right, that's what we're hitting it.
Yeah.
Or we're reducing
Yeah.
the total annual by the 12 or whatever.
That's exactly right. Gosh, what else do I wanna say about this?
Well, so using a factor, like a percentage, like let's say it's July of this year, and they've made more commissions than they did last year. Do you wanna talk about that, or no?
No, I mean, no, we really don't have to try to figure out percentage, we just take the earnings
Okay,
and go from there.
so we would
because
just straight up hit them with stuff.
Straight right there, yeah, yeah.
Is there ever a point where we would do, so instead of doing a 24-month average, if we've shown obviously more earnings like she was talking about, could we not do a 30-month average?
Sure.
Okay.
Yeah, if we could document it.
Okay.
But with tax returns, it's gonna be really hard because it's yearly.
But if it's increasing, then a 30-month average is gonna bring that number down. You would want, like.
Could
when
you-
was-
Oh, I'm sorry, no, so what I meant is, can you not use so let's just say it's like, you know, like here it was 24.29 or 45.49.
Yeah,
It's on that first one.
There.
Yeah, so 45.49, and then, you know, again, if we're 3 months in at 12, I mean, we can assume that that's gonna be higher. Can we not just do 12 months plus the 6 months of this year? Could we not do like, you know, 18 months?
If you would've gotten here on time, he's already answered that.
I mean.
I was thinking the same thing.
Not really, because he's got a history of, the only time
Okay.
you,
No, it's
the only
fine.
time you'd wanna do something like that is if, let's say he's got a new job, a new position, and his income is really, income from 2015 really isn't supportive of what he's doing now. He got a new position,
Oh,
new
okay.
job.
I gotcha.
So if he's, everything's same job, same pay structure, then you'd have to use a 24-month.
Okay.
Unless you can prove why his 15 is so much lower. He got sick, he was out of work, car wreck, whatever.
Cool, thank you.
On the unreimbursed business expenses, isn't there, like if it's just $500, isn't there a certain time when you don't hit them with that at all?
Not that I know of.
Okay.
I mean, if it's on there and they earn over 25% commission, we're gonna hit them for it.
Okay.
Is it only if we're using the commission though? Let's say he qualifies with his base pay.
Right, if he's qualified with base pay, and that's in here also, the second page down, it talks about commission. And it says, if commission income represents 25% of the borrower's total annual, employment income, then you have to hit them for it. So if they're not if we're not using commission income, then no, we don't have to hit them at all for
For
it.
the unreimbursed expenses?
Right,
At all, we just
At
use our
all.
base pay?
just their base pay, bonus pay,
Oh, that's
overtime
nice.
pay, we don't have to hit them. So only commission borrowers.
As long as we don't use the commission, okay.
Yep.
Is that somewhat new, or is that been in
No.
place?
That's, it's,
Alright.
I mean, it's like new since I've been alive. But,
I guess
it's
same
been
with me.
A couple of years.
Yeah.
All right, let's look, any questions on that? No, all right, let's look at the next one. Wait. All right, the next one looks to be a duplicate. So let's not look at that one. All right, let's look at the one past that. Where commission for year-to-date is 12,000, 16 earnings is 75,000, and then 15 is 3,000. So just looking at this, it looks like his income, something happened in 15 and 16 and year-to-date, right, because 15 is not supportive. But if we go back and look at his hire date, he was hired in December of 2015. So this is a borrower where we don't quite have 2 years worth of commission income. This is one that might fall underneath the, hey, can we use under 2 years of commission income? And it looks like his income is supportive, so he, in 2015, he earned 3,000 basically for 1 month. Year to, 2016 is 75,000. Let's divide that. So 650, and then year to date is 12,000. Again, these are for the first 3 months, just to make the math easy, 4,000. So, yeah, so it looks like the income is going down. So he had a great year in 2016. His year to date really doesn't support it, but let's see if it's, let's take away 25%. Yeah, so it looks like his income is declining by more than 25% from 2016 to year to date. So in this case, we would either say it's not stable or figure out what's going on with it. Now
So-
we have to start explaining his income, explaining why we're using what we're using.
But this
Yeah.
would play into if, like, he's a boat salesman, obviously he's coming into the busier months, so that's when you
Yeah.
start to think about that.
He's an underwater BB stacker.
He is an underwater BB.
Oh.
You ever stack BBs underwater? You probably get paid a lot of money.
That's hot.
Okay, so could we look at the prior, could we just forget 2016, let's say he's been doing it forever?
Yeah,
Can't we go back to 15, 14?
we can, yeah, we can definitely look at those years and figure out what's going on. If it's 14 and 15 are supportive of 16, and like you said, for year to date, it's just not, it's off-season for the guy, yeah, we can definitely go back and look at prior years and use an average that way. Just get a letter saying, yeah, it's kind of slow season, you know, water freezes, and I can't stand
Is, if it is a conventional loan, really anything other than FHA, we're okay just using year-end pay stubs, right? But with FHA, we need to know that it's likely to continue.
FHA, no, cause
Not anymore?
yeah, we can assume it's likely to continue
Okay.
if they've received it. It's only whenever they say it's not likely to continue is whenever it draws
So
a
if you can
flag.
get year-end stubs, it's so much easier.
Yeah, absolutely.
Well, you know, like some of these companies that use the work number, you're not gonna get anybody to say it's likely to continue. They
Right,
won't do it.
that's okay.
Right, yeah.
That's okay, cause again, we're gonna assume it's likely to continue unless it tells us otherwise.
Okay.
Do you have financials on what's No.
Yeah, you guys ready to go to the next one?
Yeah.
So ready.
All right, so the next one, we're gonna look at my 401K statement. Okay?
Good job, man. Solid gold.
Yeah,
Have anything?
and what we're going to do on this
Chris Reed, Danny?
is apply our employment-related assets for qualifying income. So kind of look through your guideline packet and find the one where it says employee offer contract at the top.
Yep.
Should be towards the back.
So I think it's page 4 on this, page 4.
Is it page 4?
Yeah.
Okay. All right, so Mandy asked that we talk about the employment-related assets for qualifying income. Now, I'll let you guys know this, this is really hard to qualify a borrower under this, and only Fannie allows you to do it. Freddie does not, and FHA does not. There's a couple things we have to make sure. It has to be employee-related assets, has to be a 401K. If they tell you in here, 401K, RA, SEP, retirement accounts. It can't just be a savings account or a money market account, because those are not retirement accounts. That's no different than having a savings account and pulling draws and calling it income. We can't call it income, right? The only time we can call income from savings accounts is whenever they get dividends or whatnot. That's the only income we can apply. It has to be a 401K account investing. So let's go through and calculate, see how much income we could derive from the guy who has 2.5 million in the bank. Chris Reed. All right,
He
so.
would be here.
Yes, he would.
Yes.
You're never gonna.
No. All right, let's read this guideline, because it's really confusing, but we'll work our way through it. If you have one, just send it over and we'll talk about it together. Okay, so IRA accounts. Oh, another caveat to this is max LTV is 70% and minimum FICO score 620.
Oh,
And it's for purchase, limited refi only, primary residence, second home. It's really awkward. So we will take this, so it says what we have to do is get our invested balance.
Yep.
We have to minus
I'll take your-
10%, right? So 250,000 minus 10% gives us 225,000. That's our total eligible. Then we have to minus the funds we're using for closing, let's assume we're not. Then we have to take away 30%,
Goodness gracious.
so minus another 30%. 1575000. Then we have to divide by the terms of the loan, so this we divide by 360. So that gives us an income of $4,375 per month. So as you see, $2.5 million in this program really doesn't add a whole lot of income back to us.
Well, 50 grand a year.
Yeah, 50 grand a year. So you really have to have a lot of money in there to make that program work for your borrower.
this is good to know, cause I know we've had some files where,
It gets all the way to
Yeah.
processing.
just
Yeah.
like the Wells jumbo loans where you got the borrowers that have big bank accounts.
Because
and
the
then,
whole
you know, they hit you for stuff.
3-year thing was so long ago.
Yeah.
You can't do that.
Yeah. All right, so if you guys see that, you want to apply it, let's get together, go over them to make sure that we're applying the guideline correctly, all right? Like I said, I've never done it. I've never closed one with it, that doesn't mean that it can't happen.
Unicorn.
All right, next we're going to talk about grossing up Social Security income. So go to your tax return. Social Security benefits. There's two of them. So we'll take the top one, which shows $24,000 for Social Security benefit income. In taxable amount, $24,000. No, 100% of his income is taxable, so we cannot gross any of this out. Okay? So 24,000 divided by 12, which that's it.
The name.
Being Old Griner at Brokeville, Texas. All right, the next one shows that Social Security benefit, $36,000, taxable benefit, or taxable amount is $3,600. So what we would do, we would take the difference of the two. 36,000 minus 3,600. That's 3,240. We'd multiply, we'd gross that amount up times 125%. Now, remember,
That's 32.
yeah, 32,400. That gives us 8100.
Okay, so there's
You gross it up by
sheet that does
25?
this for you. He's walking through the manual steps, but this, here. It's on the shared drive, under documents, under SSI. And it's really easy to use, so every time you have a social security income borrower, please use it, because it'll be spot on.
Now, FHA, you can only gross up 15%. Yeah, that's a change. So make sure that if you're using this, I don't know, I've never used it.
No,
Does it
I'll
just be
update
multiple?
it. No, it doesn't. It, I need to add that to the bottom.
15%?
FHA is 15%.
Danny, you bring your boat 25?
So you take
I'll
this
do a
figure
separate one.
times the 125%,
Yep, that times 125%, which comes out to 8,100. And then you add it back
Your social security.
to 36,000. That gives us 44,100. So that gives us 36,75. So extra $675.
Okay.
All right, any questions on any of this?
It's all good. Thank you for doing the class, Chris.
Yeah. How long I got?
37.